Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Wednesday, March 16th. Stocks on Wall Street are heading lower again, following big declines in the major equity averages yesterday. Neither U.S. shares nor the European markets are participating in the Asian rally started by a rebound in Japan overnight. Tokyo's Nikkei 225 index jumped nearly 6% after losing more than 16% of its value over the past two trading sessions. Traders there are taking some comfort from the Bank of Japan's efforts to inject a massive amount of short-term liquidity into the markets. But the continued threat of a major nuclear radiation leak is keeping most global investors on edge.
Here in the U.S., the market is also focusing on some troubling economic data. Housing starts plunged 22.5% in February. That was the biggest decline in more than 25 years, and it dropped the seasonally adjusted rate to near a record low. Economists were expecting the number to fall, but nothing near what we actually got. The report is dragging down homebuilders such as Lennar and Pulte Group in early trading. Separately, prices at the wholesale level jumped 1.6% last month, as food costs saw their largest one-month increase since 1974. Higher fuel prices also contributed to the bigger-than-expected rise. Excluding volatile food and energy costs, the core producer price index rose just 0.2%, in line with estimates.
Oil prices are rebounding from their biggest one-day drop in nearly 6 months and are now back near $99 a barrel. Investors seem optimistic that the problem at Japan's damaged nuclear plant can be contained and that energy demand from the world's third-largest economy will pick up. Oil prices are also finding support from the continued unrest across the Middle East and North Africa. Today, the markets in Bahrain are closed after the government declared a state of emergency. Security forces cracked down on protesters in the capital city, and the Saudi military entered the country. Other commodities are rising along with oil and natural gas. Right now, gold is trading back around $1,400 an ounce after falling to a 4-week low earlier.
Airline stocks are under pressure today as fuel costs rise, but the biggest decliners among U.S. shares are in the technology sector. Investors are concerned about the impact of the Japanese disaster on companies that rely on the country for technology and consumers. IBM relies more on Japan than many of its peers, and its stock price is reflecting that fact today. Big Blue is dropping nearly 2%, dragging down the Dow Industrials. Dell, Texas Instruments, and Apple are also losing ground in early trading. JMP Securities downgraded Apple from market outperform to market perform on concerns about Japan, and that stock is down about 2% as well.
In Europe, the focus is back on the sovereign debt crisis, following another downgrade. Moody's Investors Service cut Portugal's credit rating 2 notches, from A1 to A3. The move was not a surprise, but it could fuel speculation that Portugal will eventually have to follow Greece and Ireland and ask for a bailout from the European Union and the International Monetary Fund. That's the latest from Weiss Research. Have a great trading day.